February 26, 2007. A trader in New York presses enter. In less than 48 hours, the Shanghai Stock Exchange plummets 9%. Tokyo panics. London freezes. What happened? Nothing. Just an ordinary day on Wall Street. Wall Street isn't just an address in Manhattan. It's the nerve center of the global economy. And today you're going to understand exactly how a move here can bring down, or save, markets on the other side of the planet. Wall Street was literally born as a wall. In 1653, Dutch colonists erected a wooden barricade in southern Manhattan to protect themselves from invasions. More than 3 centuries later, that wall has become the epicenter of global capitalism. And the irony is perfect. What once protected a colony now exposes the entire world to every fluctuation, every decision, every whisper of speculation. But Wall Street's power does not just come from the money that circulates there. It's about 30 trillion in market capitalization in American stock exchanges alone. The real power lies in influence. Wall Street sets interest rates. It determines the price of commodities. It dictates which companies survive and which disappear. And, perhaps most importantly, Wall Street sells confidence. When American markets sneeze, the world catches pneumonia. Let's go back to that day in 2007. What really happened? A poorly calibrated algorithm? A rumor? None of that. It was pure market psychology. Investors in New York began selling Chinese stocks listed in the US for fear of overheating. The news traveled faster than light through fiber optic cables. Within minutes, hedge funds in London adjusted positions. Within hours, Shanghai was bleeding. The connection wasn't economic, it was emotional. And that's the secret of Wall Street. It doesn't just move money, it moves fear and hope on a global scale. Why does this matter now? Because the world is more connected and more fragile than ever. Any crisis on Wall Street spreads instantly. Any euphoria does too. And with the rise of new players like China, global dependence on Wall Street is being tested in ways we never imagined. Understanding this dynamic isn't just fascinating. It's essential for anyone who invests, undertakes, or simply wants to understand the world they live in. If you want to understand the game before you play it, you're in the right place. And if you're not already subscribed, now's the time. Because what comes next is the anatomy of global financial power. So how exactly does Wall Street manage to shake the entire world? Let's break down this mechanism into 3 core levels: capital, information, and psychology. First, capital. Wall Street directs investment flows that can cross borders in mere seconds. When a colossal fund like BlackRock or Vanguard, which together manage over $20 trillion, decides to reallocate just 1% of its portfolio, entire nations feel the shockwaves. Remember 2013? The Federal Reserve hinted at reducing stimulus, and just like that, emerging markets bled $60 billion in a matter of weeks. It wasn't even a crisis. It was just a tiny shift in expectations. Second, information. Here's a secret. Wall Street doesn't just react to the news, it often creates it. Analysts at major banks like Goldman Sachs or JP Morgan publish reports that can move markets before most investors even finish reading the headline. A simple rating change from buy to neutral can send a stock plummeting by 10%. Why? Because these institutions have built up decades of credibility, insider networks, and yes, conflicts of interest that can turn their analysis into a self-fulfilling prophecy. Think back to 2008. When Lehman Brothers collapsed, it wasn't the crash itself that triggered the global crisis. It was the information vacuum. Panic set in. No one knew who was exposed. Banks stopped lending to each other. Credit froze. And economies worldwide slid into recession, all because Wall Street lost confidence in itself. Third, and perhaps most crucially, is psychology. Wall Street acts as a global emotional thermometer. When the S&P 500 index climbs, an investor in India, Brazil, or Nigeria suddenly feels more secure. When it falls, fear spreads like a virus. This creates wild cycles of euphoria and panic that often have little to do with a country's actual economic health. It's all about perception. But Wall Street doesn't operate in a vacuum. It wields specific instruments that amplify its power. First up, derivatives, contracts that are essentially bets on the future. The global derivatives market is valued at over $600 trillion. Yes, you heard that right. That's more than 10 times the world's entire GDP. When these complex bets go wrong, the damage is systemic. That's exactly what happened in 2008 with those toxic assets disguised as safe investments. Next, ETFs and passive funds. Today, trillions are invested in funds that simply track major indices like the S&P 500. When these funds buy or sell, they aren't analyzing individual companies. They are moving entire market sectors in one go. This creates artificial volatility and dangerously synchronizes markets, meaning when one falls, they all fall together. And then there are the algorithms. Over 70% of trades on Wall Street are now executed by machines. These bots react in microseconds to news, patterns, and even social media posts. Back in 2010, a flash crash saw the US market drop 9% in minutes, only to recover almost completely just as quickly. Nobody really understood what happened. It was just the robots talking to each other. And at the very center of this complex web, there's an institution that isn't technically part of Wall Street, but acts as its most powerful ally, the Federal Reserve. When the Fed raises interest rates, the US dollar becomes more valuable. Capital flees emerging markets, causing their local currencies to tank. When the Fed lowers rates, it's a global party. Cheap credit floods the world. But this party always has a hangover, and Wall Street is always the first to know when it's coming. In 2020, during the pandemic, the Fed injected trillions into the economy to keep it afloat. While millions lost their jobs, the S&P 500 soared to record highs. This wasn't a fluke, it's by design. Wall Street is optimized to capture liquidity. When there's easy money floating around, it's always the first in line to grab it. If you're finding this breakdown insightful, do me a favor and hit that like button and activate the notification bell. And I'd love to know what you think. Does Wall Street have too much power? Drop your thoughts in the comments below. Now let's get back to it. So what does all this mean? Wall Street is neither villain nor hero. It's an infrastructure, a resource allocation machine that, by historical accident, has become the nerve center of global capitalism. But here's the problem. This centralization creates fragility. When Wall Street goes into crisis, the whole world pays the price. And every time this happens, governments bail out the banks with public money. It's privatization of profits and socialization of losses. The game is rigged, and everyone knows it. At the same time, alternatives are emerging. China is building its own financial system. Cryptocurrencies are challenging the dollar's hegemony. Regional markets are gaining strength. Wall Street is still dominant, but for the first time in a century, its power is being questioned. Here's the big question. Will Wall Street continue to rule the world in 2030, 2050? Or are we witnessing the beginning of a transition to a multipolar system? The answer depends on three factors. First, the dollar. As long as it remains the global reserve currency, Wall Street retains power. But countries like Russia, China, and even Brazil are already trading in other currencies. De-dollarization is slow, but real. Second, technology. Blockchain, artificial intelligence, and decentralized finance are creating new systems that don't depend on central banks or large institutions. Wall Street can adapt, or it can be overtaken. Third, politics. Regulation, taxation of financial transactions, capital controls, all of this can limit Wall Street's reach. But this requires political courage, and so far, few governments have dared to confront the power of money. If there's a lesson here, it's this. Financial power is real power. Whoever controls capital controls narratives, policies, and futures. Wall Street doesn't dominate the world through conspiracy. It dominates through efficiency, speed, and scale. But this domination comes at a cost, and that cost is paid in crises, inequality, and instability. Understanding Wall Street isn't just for investors. It's for anyone who wants to understand how the world really works. Because while you sleep, traders in New York are moving billions, and when you wake up, the price of gasoline, food, and your salary has already changed. That's the influence of Wall Street. Wall Street influences global markets because it's fast, powerful, and indispensable. But indispensable doesn't mean eternal. The future of the global economy will be decided in the coming years, and you need to be prepared. Here at Inside US Finance, we break down the game so you can play it better. Subscribed? Turn on notifications. Comment, share. And in the next video, we'll talk about the only thing that can bring down Wall Street, an American debt crisis. Don't miss it.